Hey guys, welcome back to another video. In this video, we're going to be looking at ETFs that actually reverse the stock market gains. That is actually called shorting the market. So these are some ETFs by ProShares. They are for the S&P 500. And as of the recording of this video, we have been in kind of a volatile market, you could say. Looking at this chart right here, we can see these ProShares are right now for $24.12. In the overnight market here on Robinhood is the platform we are currently using. It's actually down some amount. Now, if we look at the 1 week, we can see that we are up 11.93%. Remember, this is the inverse, right? So we're shorting the S&P. We don't always want to be doing this, but when we do it, we have to make sure that we have a strong thesis on that. And if you would have put your money into this fund, you would have gained 11.93% in 1 week. Now, if we want to look at the 1 month, 18.44%, that is quite high. And then we can also look at the 3 month at 15.74%. We can see it's gone quite a bit up in the last 3 months. That's 15% gains, which is quite significant. And now we can look at year to date, we are up 8.80%. So if we would have short the market since the start of this year, 2025, we would be up 8.80%. Now you can see as we look into the 1 year, this is where it really shows the tail, right? We're actually losing money as we own this. If we want to look at the 5 year, and then of course the max here, and we can see those big peaks right here in those down markets when this fund was actually doing very well back here in 2009, as we remember the financial crisis. Let's move on to two other ETFs that actually short the markets. Now we're looking at the ProShares Ultra Pro Short QQQ. The previous one was the S&P 500, if you guys were curious on that. This is the NASDAQ 100. Now, we can see it has gone up quite a bit in 1 day. We can see we're actually down in the overnight session here. That's why I wanted to record this, because this is the best time to actually look at these charts. So if we want to look at the 1 week, we can see exactly how volatile the market has been. If we would have put our money into this ETF, we would have been up 15.55%. Quite significant in that. And then if we wanted to look at the 1 month, we are up 25.13%. I think this shows the importance of understanding market dynamics, because we can understand if we know the market is going to be down, we can actually make quite a significant amount of money shorting. Now, I'm not a big proponent of shorting stocks, but we can see that it has been quite lucrative for the people that know what to do. Year to date, we are up 13.51%. And we can see on the 1 year, we have lost money on this, but we can see the big peaks in this and where it has been, right? So we have been losing money on this, but on the 5 year, we can see back during that huge spike during COVID, that was back in 2020 when people were trying to make money. And that was the COVID pandemic. Obviously, we all remember that. That was not a fun time, but we can see the different spikes here along the market. We can see all that, and then all the way back here in 2000. And let me see back here, basically when it started, look at that, how crazy expensive this was, right? And then it dropped down, and like that. And we can also see the other information that it has on here, what the high was today and the low and all that information, because Robinhood is great at that. What's interesting to see about this is that these are leverage funds. So if you guys don't know what leverage funds are, it's just amplified into what it's actually going to be in. So this is a 2x leverage, and then that's a 3x leverage. Let you guys pause the video to understand that. So your gains are going to be leveraged just that much higher, and your losses will be leveraged that much lower. Now let's move on to the last ETF for shorting the stock market. Here's another S&P 500 short position that we can open up. The only thing I don't like about this position is the expense ratio. We can see right here how expensive that is. It is 1.07%, crazy high, but it is actually a 3x leverage, quite high, but we can see just how significant our money would have grown if we would have put it into this fund. We can look at the 1 month. Look at that. 1 month right there. We are up 18.66%. We can see all the way back here, we were significantly lower on that number. Now let's look at the 3 month. We are up 17.66%. And then of course, my favorite is year to date, because that's really what we want to mark this as. We are up 9.08%. And then let's look at the 1 year. Obviously, we're losing money. And then the 5 year, we can see, again, that big spike during COVID. And then on the max time frame back when we had the massive financial recession. So remember, year to date on the 3X Bear, it is up 9.08%. Now let's go check out VOO, which is the S&P 500, just so you can see how much money we have lost year to date. Now this is Vanguard VOO S&P 500 ETF. We can go on to the year to date and we have actually lost negative 2.57%. Hope this video helped you guys out. Let me know if you have any questions or want to talk about a specific stock down below. As always, please like and subscribe, and I'll see you guys in the next one.